If this sounds familiar, that's because you've heard it before. Not from politicians, not from economists, from history, because right before an empire declines, it always feels stable. Markets still function. The currency still dominates. The military still looks unmatched. And the public believes nothing fundamental can change. That's exactly where Britain was, right before it wasn't. This video is not about America collapsing tomorrow. It's not about panic. It's not about predictions pulled from thin air. It's about a mistake. A specific mistake that destroyed the British Empire's dominance, quietly, gradually, and without a single dramatic moment. And today, that same mistake is forming again. Not in London, in Washington. Let's go back. At the start of the 20th century, Britain was everything America is today. The global reserve currency, the center of global trade, the financial capital of the world, the strongest navy on earth. The British pound wasn't just trusted, it was the system. Trade settled in pounds, debt was denominated in pounds. Global finance revolved around London. Sound familiar? And just like today, Britain had enemies, rivals, economic competition, but none of them mattered, because Britain believed something critical. As long as the currency is dominant, the system will hold. That belief was wrong. Britain didn't collapse because of a single war, or a single recession, or a single policy failure. It declined because it made one structural error, and refused to acknowledge it until it was too late. Britain chose to protect the appearance of strength instead of fixing the foundations underneath, and that decision locked them into a path they could not reverse. Here's what that mistake looked like in real time. After World War I, Britain emerged victorious, but financially exhausted. Debt levels were massive, industrial competitiveness was declining, the empire was expensive to maintain. Instead of adapting, Britain tried to freeze history. They pegged the pound back to gold at a level that no longer reflected reality. Why? Because admitting weakness would threaten confidence. So Britain chose optics over structure. They defended the currency. They defended prestige. They defended status, and quietly sacrificed growth, flexibility, and resilience. At first, nothing broke. Markets stayed open, the pound stayed strong. London remained a financial hub. But beneath the surface, pressure built. Exports weakened. Industry hollowed out. Debt became harder to service. And every year, Britain had fewer options. Not because it collapsed, but because it cornered itself. This is the part most people misunderstand about empire decline. It doesn't start with collapse. It starts with constraint. When a system reaches the point where every solution creates a new problem, every delay increases long-term damage, and every correction feels politically impossible, that's when decline becomes inevitable, even if it takes years to show. Because this is where history stops being abstract and starts looking uncomfortable, because the same dynamics that trapped Britain are now visible again. Different country, different century, same mistake. And in the next part, we'll look at exactly what that mistake was, step by step. Not through opinion, not through ideology, through structure. Because once you see it, you can't unsee it. Britain didn't lose its empire because it was weak. It lost it because it refused to adapt. And that distinction matters because declining systems don't fall apart when they're powerless. They fall apart when they're trapped by their own past success. After World War I, Britain faced a reality it didn't want to accept. The war had drained its finances. Debt exploded. Industrial competitors, especially the United States, had surged ahead. But instead of restructuring its economy around this new reality, Britain tried to restore the old world, the old prestige, the old dominance, the old financial order. And this is where the fatal mistake happened. Britain decided to return the pound to the gold standard at its pre-war value, not a realistic value, not a competitive value, a symbolic one. Why? Because lowering the pound would signal weakness, and weakness, they believed, would destroy confidence. So Britain chose to defend the currency at all costs, even when the economy underneath could no longer support it. Here's what that decision caused. To keep the pound strong, Britain had to keep interest rates high, suppress wages, cut domestic spending, sacrifice industrial growth. In other words, Britain chose currency prestige over economic health. This is the moment the empire sealed its fate. At first, it worked. The pound stayed strong. London stayed a financial center. Global trade still cleared through Britain. From the outside, everything looked fine. But internally, the economy was suffocating. Exports became uncompetitive. Unemployment remained structurally high. Industries declined instead of modernizing. Britain wasn't collapsing. It was hollowing out. And here's the most dangerous part. Once Britain committed to defending the pound, it lost flexibility. Any attempt to stimulate growth threatened the currency. Any attempt to lower rates risked capital flight. Any attempt to restructure debt risked loss of confidence. So policymakers were boxed in. They didn't have good options. They had least bad options. This is what empire decline actually looks like. Not chaos, constraint. A system where growth becomes secondary to stability, policy exists to protect appearances, and long-term damage is traded for short-term calm. Britain spent years trying to maintain the illusion that nothing fundamental had changed. But the world had changed, and the system refused to acknowledge it. Eventually, reality won. Not overnight, not dramatically, but structurally. Britain was forced off the gold standard in 1931. By then, the damage was done. The pound never regained its former role. The empire slowly unraveled. Financial leadership shifted across the Atlantic, not because Britain collapsed, but because it lost the ability to adapt. This is the key lesson most people miss. Empires don't fall when confidence disappears. They fall when confidence becomes expensive to maintain. And that's the bridge to the present, because the question isn't whether America is Britain. The question is whether America is now facing the same kind of structural trap. America is not collapsing. That's what makes this dangerous. Because Britain didn't collapse either. Not when the mistake was made. It looked strong. Its currency looked dominant. Its financial system still worked. And so does America's. That's the illusion. The United States today faces the same structural dilemma Britain faced a century ago, just on a far larger scale. For decades, the U.S. benefited from something no empire before it ever had: the dollar as the world's reserve currency. That meant America could borrow endlessly, run persistent deficits, expand debt without immediate consequences. Because the world needed dollars, just like Britain once needed the pound to stay dominant, America needs the dollar to stay trusted, and this is where the trap begins. To maintain dollar dominance, the U.S. must project strength. Strong institutions, strong markets, strong currency. Weakness is not allowed, because weakness threatens confidence, and confidence is the foundation of the entire system. So policy choices are no longer about growth, they're about appearance. Here's the dilemma. If the U.S. allows the dollar to weaken meaningfully, inflation worsens. Foreign holders lose confidence. Capital seeks alternatives. But if the U.S. defends the dollar aggressively, interest rates stay high. Debt servicing explodes. Growth slows. Financial stress rises. There is no painless option, just like Britain in the 1920s. This is why America feels stuck. Rates can't go too low. Rates can't stay too high. Spending can't be cut. Taxes can't be raised meaningfully. Debt can't be paid down. Default is impossible. So what happens? The system rolls forward. Debt is refinanced. Costs are delayed. Pressure builds quietly. This is currency defense through constraint. And it always produces the same result. The economy underneath weakens to protect the system on top. That's exactly what happened to Britain. And it's starting to happen now. You can already see the signs. Productive growth slowing. Asset prices elevated but fragile. Credit tightening unevenly. Financial markets hypersensitive to policy signals. Nothing is breaking, but everything is becoming conditional. Conditional liquidity, conditional confidence, conditional stability. And here's the most uncomfortable truth. America doesn't lose power because the dollar collapses. America loses power because maintaining the dollar becomes costly. Just like Britain didn't lose the pound overnight. It lost the ability to support it without damage. That's the real shift. This is why 2026 matters. Not as a date, not as a prediction, but as a pressure point. Because that's when massive debt rolls over at higher rates, policy flexibility shrinks further, market tolerance tightens, and confidence is tested, not emotionally but mathematically. Britain crossed this line when defending the pound became more damaging than letting it adjust. America hasn't crossed it yet, but it's getting closer. Here's the part history never teaches properly. Empires don't fall when people panic. They fall when normal still feels normal. Britain didn't wake up one day and collapse. There was no single headline, no sudden breakdown, no dramatic reset. Life continued. Markets opened. Shops functioned. The pound circulated. And yet, power was already slipping away. That's exactly how decline begins. The mistake most people make is imagining decline as chaos, riots, currency collapse, hyperinflation. But those are end-stage symptoms, not the beginning. The beginning is far quieter. What actually happens first is behavioral change. Institutions adjust before the public. Capital moves before headlines. Risk is priced before panic. And by the time everyday people notice, the advantage is already gone. This is the phase America is entering now. Not collapse, not crisis, compression. Here's how compression works. The system still functions, but it becomes tighter. Credit becomes selective. Liquidity becomes conditional. Growth becomes uneven. Mistakes become expensive. Nothing breaks, but everything becomes harder. Britain experienced this after World War I. The empire still existed. The pound still traded. London was still a financial hub. But Britain could, no longer, finance growth easily, absorb shocks effortlessly, maintain dominance without sacrifice. So every decision became a trade-off. Support the currency, damage the economy. Support the economy, weaken the currency. There was no winning move, only delay. America is now facing the same structure. Every policy decision creates stress somewhere else. Lower rates, inflation risk returns. Higher rates, debt service explodes. More spending, confidence erodes. Less spending, growth stalls. There is no free option anymore. This is why markets feel different today. Rallies feel fragile. Good news creates volatility. Bad news hits harder. Because the system is no longer buffered. It's exposed. And here's the critical part. Most people don't understand. Decline doesn't mean Americans get poorer overnight. It means relative advantage erodes. Others catch up. Alternatives become viable. Dependence weakens. Power diffuses. Britain didn't stop being a country. It stopped being the center. And that distinction matters. Because when you're no longer the center, you pay more to borrow, you negotiate instead of dictate, you absorb consequences faster, you lose room for error. That's the real cost. America is not losing relevance, it's losing effortless dominance. And effortless dominance is what allows mistakes to go unpunished. Once that's gone, systems behave differently. Markets become less forgiving, capital becomes cautious, trust becomes conditional. This is why the most dangerous moment is when nothing looks wrong. Because decline starts invisibly, inside incentives, behavior, and structure, not in headlines. Here's the most uncomfortable truth about empires. They don't fall because they're weak. They fall because they wait too long to change. By the time decline is obvious, the option to reverse it is already gone. This is where Britain made its final mistake. Not overspending, not war, not debt. Those were symptoms. The real mistake was believing that time would fix structural problems. It didn't. Time made them permanent. Once an empire crosses a certain threshold, something irreversible happens. Not collapse, normalization of fragility. Britain reached that point between the 1920s and 1940s. The pound still circulated, trade still functioned, markets still opened, but Britain could no longer. Control global capital flows, finance itself without compromise, enforce rules without negotiation. The system still worked. It just stopped bending in Britain's favor. America is now approaching that same line. And the most dangerous part, there is no alarm, no bell, no announcement, no official declaration that says, from today onward, the old rules no longer apply. The shift happens silently. Here's how you know a system has crossed the point of no return. Not when it collapses, but when every solution creates a new problem. That's where America is now. Raise rates, debt costs surge. Cut rates, inflation resurfaces. Spend more, confidence erodes. Spend less, growth stalls. There's no clean move left, only trade-offs. This is what a mature, constrained system looks like. Not broken, not failing, boxed in. And once a system is boxed in, behavior changes everywhere. Governments manage optics instead of outcomes. Markets trade narratives instead of fundamentals. Institutions hedge instead of commit. Citizens feel pressure but can't explain why nothing explodes. Everything tightens. This is why 2026 matters. Not because something dramatic must happen, but because multiple buffers disappear at the same time. Cheap refinancing is gone, and policy flexibility is reduced. Consumer resilience is thinning. Global patience is shorter. This is when systems stop forgiving mistakes. Here's the hardest lesson history teaches. You don't get a second chance at dominance. Once trust becomes conditional, it never returns to being automatic. Britain never regained unquestioned monetary leadership. Spain never reclaimed its empire. Rome never recovered its peak power. Not because they collapsed, but because the world moved on. America is not collapsing, but it is transitioning from command, negotiation assumption, evaluation, privilege, pricing. And that changes everything. This is why waiting for confirmation is the worst strategy. By the time headlines admit stress, markets have already adjusted, capital has already repositioned, opportunity has already shifted, history rewards positioning, not awareness. So let's be clear about what this video is not saying. It's not saying America is finished. The dollar will disappear. Everything will crash. That's lazy thinking. What it is saying is far more serious. The system you grew up believing in no longer operates on the same rules. And people still playing by old assumptions will be the most confused by new outcomes. The British Empire didn't lose power in a single year. It lost it by staying comfortable too long. America's risk is not collapse. Its risk is delay. Because once the world learns it has options, even imperfect ones, power never concentrates the same way again. That shift is already underway. Quietly, gradually, structurally. So remember this line: empires don't fall when people are afraid. They fall when people feel safe. And right now, nothing looks wrong. That's the warning, not panic, not prediction, not fear, pattern. If this video changed how you see power, money, and history, comment pattern below. And if you want more breakdowns like this, one without noise, without hype, without fake optimism, subscribe to AG Currency.